Welcome to Cat Eye US Stock. We watch markets with calm focus and sharp instincts. Monday, May 26, 2026. The vibe, risk on, but highly selective. The Nasdaq pushed to a record close on a semiconductor chase while the Dow actually slipped. The big tell today? Money didn't buy everything. It rotated hard out of energy and defensives and straight into chips and cyclicals. Looking at the S&P 500 heatmap, this was a sharply split board, a big chunk green, a big chunk red. But your eye goes straight to neon green semiconductors and strong industrials. On the flip side, energy and consumer staples were deep red, and the biggest megacap weights? They mostly churned in gray or leaned red, with Google as the lone standout. So, what explains that heat map? Today was a reallocation day, not a simple buy the index kind of day. Semiconductors and industrials grabbed the leadership baton. Energy got sold hard, acting as the main funding source. Defensives didn't catch a bid at all, and the Russell outperformance fit the exact same story. More cyclicals, more beta, and definitely less hiding. The tension underneath the move was pretty clear. Geopolitics and inflation pressure, mostly through oil battling growth and AI exuberance. The rotation was tied to Iran de-escalation chatter. Crude went weak, yields eased, giving the market a permission slip to pay up for the next layer of AI names. The unusual part? A total leadership inversion. Second-tier chips and cyclicals did the heavy lifting, while the megacaps stayed muted. The indexes looked calm, but trading books? They definitely didn't. Over on the chatter side, the key driver was the headline-driven narrative around Iran. Look, that's not a clean, scheduled catalyst, so it can whip around wildly. If the story gets confirmed, the market leans into cheaper oil. But if it reverses, energy and yields can snap back fast. Treat this as headline risk, not a settled fact pattern. Micron, ticker MU, was the gravitational center of the day. It shot up nearly 20%. The catalyst? A major bullish sell-side reset, with UBS hiking its price target to a street-high level on AI memory demand. But here's the bigger point. MU didn't move alone. It pulled the entire chip complex right into a massive momentum loop. AMD was the clean, high-beta read-through, up almost 8%. This was a halo bid tied straight to that Micron-led momentum. Why does it matter? Because when names like AMD rip, while the megacap generals just churn, it tells us traders are pressing the next tier AI risk trade. They aren't hiding in defensives. Taiwan Semi, ticker TSM, added over 2%. In the context of today's tape, that's your supply chain confirmation. It reinforced that this wasn't just one stock going vertical. Risk appetite extended all the way through the semiconductor ecosystem right down to the foundry layer. On the other side of the rotation, Exxon, ticker XOM, dropped over 3%. This ties directly to crude weakness on hopes for de-escalation in the Middle East. It pressured oil and eased inflation fears. And on a day like today, that energy sell-off reads exactly like the funding source for the massive chip chase. Alphabet, ticker GOOGL, was the notable green megacap today, up around 1.5% while other top weights just churned. That relative strength really mattered for index optics, even though the real, raw energy stayed firmly in semiconductors. And then there's Nvidia. Slightly down, even as the rest of the semiconductor space ripped. This is a crucial detail. It highlights a leadership handoff toward memory and adjacent AI plays. Going forward, Nvidia becomes the ultimate tell. Does it catch up? Or does chip strength stay narrowly concentrated elsewhere? Looking ahead, the near-term setup stays pretty simple. Number 1, geopolitics and oil. Any shift in the de-escalation narrative will violently swing crude, yields, and risk appetite. Number 2, watch semiconductors. Do we get follow-through or mean reversion after that MU surge? And number 3, see if small caps can actually hold their strength. As for the calendar next week, Monday brings ISM manufacturing, Tuesday is JOLTS, Wednesday features ADP and ISM services, Thursday is jobless claims, and Friday, the big one, Non-farm payrolls, the unemployment rate, and average hourly earnings. Bottom line, the index was green, but the market was split. Semiconductors led the charge, energy paid the bill, and megacap leadership was totally mixed. If you're trading tomorrow's tape, the cue is simple. Does the chip bid follow through? And do oil headlines stay calm, or completely flip the script? Thank you for watching Cat Eye US Stock. Stay curious, stay calm, and we'll see you next time.